Siddharth Vora now from PL Asset Management joining in now to take the conversation forward. Siddharth, good morning. Thank you for joining in. You mentioned that your stance now has turned more constructive and your portfolio shift has now moved from a defensive to a moderately aggressive stance. If you could explain that rationale to us first, and then we move on to your sectoral ideas as well.
Sure. So, after a very long time, we've turned bullish on the short-term, medium, and long-term prospects in India. And of course, multiple drivers behind this change in stance. From the overall macro setup for India to the micro setup for India and global cues, I think after a very long time, things are converging for the better. Everybody's already aware that tax cuts, GST reforms, lower interest rates, strong GDP growth, low inflation, banking liquidity within India, all of these are going to definitely create the demand drivers that are needed for the next leg of growth. Also, we believe that the whole earnings downgrade cycle in India has peaked out and now we're entering an upgrade cycle. Factor spreads, quantitative factor spreads were at multi-year lows, close to zero. They are now starting to reverse, which is a great sign for markets to do well, factor strategies to do well. Furthermore, if you look at India's overall trade positioning also, globally, our equation with EU, Japan, UK, China, Russia, and now finally US is also, heading in the right direction. While all of this is happening, valuations remain neutral. They are not extremely expensive. The U-turn of FIIs is critical at this point. Low DXY and rate cuts in the US will obviously fuel a rally in India, and India's relative underperformance versus other emerging market peers will ensure that we have enough room for outperformance in the next 12 months. So overall, I think reducing uncertainty, improving risk appetite, improving sentiment and breadth, and neutral valuations.
Okay. So Siddharth, you've said that you've deployed roughly 15% cash in the recent weeks. What's the cash that's left on your books now? When will you turn more aggressive on the market? And where have you deployed, this 15% cash recently?
We've deployed all the cash, actually.
All the cash, okay.
Yeah, we don't have any cash anymore to deploy. Now, any more cash that comes might come from, any rebalance or rotation if we exit a couple of stocks, enter some new stocks. And we've deployed mainly in our existing holdings. We've increased allocation to industrials. We've increased allocation to financials. We've increased some allocation to materials as well, like metals mainly.
Okay. You're talking about where you have increased exposure. Some of them are existing holdings for you. But you have trimmed exposure to private banks. What explains that? Do you prefer PSU banks over private banks? What's the catch here?
So we exited private banks 2 months back, 2.5 months back, actually. We were holding them from Jan all the way up to 2 months back. And then we've moved into NBFCs and asset management companies, and now we've scaled up our allocations there. We believe that we're entering a higher beta phase of the market with improved risk appetite, and private banks were in our portfolio mainly as a defensive, low volatility, high quality bet on the financials. Now, as we come out of the low volatility and high quality regime, increase the beta, increase the risk, I think NBFCs, asset management companies, likely to do a little better.
What about capital market names, Siddharth? Where does your preference lie? Be it the exchanges like the BSE or the discount brokers like Angel and the likes, or even the wealth managers?
So we're currently positioned within asset management companies. I think three of them, asset management companies, and exchange as well. Broadly, these are the names, yeah.
No platform companies? So much interest. Urban Company had a fabulous day one. Eternal Swiggy continues to do well. Are they a part of your portfolio?
Unfortunately not.
No, okay. Okay, all right. Thank you so much for joining in today and giving us your sense of the market moves going forward, the fact that you've turned constructive as well and have deployed the remaining cash in the portfolio as well. Time for a short break now. Management of InterArc Building Solutions will join us next to discuss their FY26 outlook and a lot more.